Hi there, I'm Don Foster. I'm one of the advisors here at Strategy First Financial Planning, and I'm joined by Dr. Steve Garth, who's the chair of our investment committee, just to talk through the quarterly market update, what's been happening in investment markets during the June quarter and the financial year 2025. And Steve, it's certainly been an interesting quarter. It's had plenty going on. Started off with the announcement of large tariffs by the US president, shortly paused for 90 days, and that had an impact on markets. And we've had ongoing geopolitical tensions, wars in the Middle East and Ukraine and in Iran. So there's been plenty going on, which has been an interesting quarter. So take us through what's been happening in investment markets, and maybe if you could start in Australia, and then we'll go through the others.
Yeah, sure, Don. Let's put up the graph of how the ASX 200 has looked like over the last 12 months. And you can see it's a very wiggly line. This is day-by-day trading in the market. But to your point, you can certainly see the effect of Trump's announcement of tariffs on friends and foes alike on the 2nd of April. Markets around the world, including here, plummeted by around 10%. But a week later, Trump put those tariffs on hold for 90 days, and markets all recovered and have actually been hitting new highs since that time. So in Australia, Don, overall, over the quarter, the Australian markets returned 9.5%, which is an awesome quarterly return. And for the full year, it's returned 13.8%, which is much higher than the average financial year return for Australia. So all in all, an outstanding year in the market for Australia.
A good year, but not a smooth ride by any means.
Never a smooth ride.
And so in Australia, obviously we're dominated by a couple of major areas, banks and resources. Have they been returning the same? How's it been playing out?
That's a really good question. And the answer is they've been doing the exact opposite to each other. On the chart here, we're actually looking at those two major sectors, financials and materials, or the miners. And together they make up more than 50% of our market. You can see financials have returned close on 30% for the full year, and that's all been driven by CBA. I'm sure our audience has heard that CBA just keeps going up. It's up 50% for the year.
Wow.
And you know what, Don? Nobody knows why.
No.
It just keeps on going up, defying everyone. On the other hand, on the material side, you can see that's a little bit negative. That's being led by our now second largest stock on the market, BHP. So the miners are all down, all a bit negative. At this time, we sort of do know the reason. BHP down by minus 10% for the year. And that's because the price of BHP in Rio is very much tied to the price of iron ore. And our largest consumer of iron ore is the Chinese property market, which has been in a bit of a hole for quite some time. So Chinese are not buying iron ore, and that's depressing the prices of our miners.
Yep. Thanks, Steve. That's great. So two different stories, but a good combined outcome for the Australian
Overall,
market.
it still works out pretty well.
Great, thank you. So let's look further afield. How have international markets been doing?
You know, Don, we'll just talk about how great Australia is. When you go overseas, it's even better. Right. So when you look at the chart here, on the left-hand side, I'm showing the developed market index. And you can see it's up 18.5% for the year. So quarterly returns are all pretty consistent right across that chart, around 6 or 7%, but also the full year returns are pretty consistent as well. Now, in the last couple of years, Don, the US has been really leading the charge of the developed markets. It is the largest part of the developed markets. But this year, you can see that, in fact, Europe has been the standout. Who would have thunk, as you mentioned in your introduction, there's a war been going on forever with Russia and Ukraine, but Europe's stock market has had a very strong return. And even when I move to the right and I look at the emerging markets, which has been quite a laggard for a few years relative to its developed market cousin, that's actually had a strong return of 17.5% for the year. So when you look at the returns of the global markets, and look at the returns of the Australian market, it's been a super financial year to be invested in a well-diversified portfolio.
Yes. So let's turn away from the equity markets and look at the bond market. So what's been happening in the bond market and with interest rates around the world?
Let me just start with interest rates, because central banks, both here in Australia, which just recently paused interest rates,
Yes.
a bit of a shock to the market, but 2 weeks ago, similarly over in the US, the central bank there also paused interest rates or held them the same, although that was expected. The thing for central banks is two conflicting forces playing. It's really got to do with tariffs, particularly in the US. Number one, tariffs can be seen as inflationary. The price of goods go up in the US. If inflation goes up, they have to put interest rates up. But the tariffs, because all the goods become more expensive, can also slow the economy right down. A slower economy means interest rates need to go down. So the central bank in the US is really weighing up how tariffs will play out. But overall, Don, inflation has been coming down. And so when you look at the chart we put up now, it shows the 10-year US bond yield, which is, the most common measure of how bonds are going. And under that, we're showing quarter by quarter how the global bond index hedged back to Aussie dollars has gone. And you can see the relationship between when yields go down, bond prices go up, but when yields go up, bond prices go down. But overall, from the start of July last year to the end of June this year, you've seen that yield sort of, volatile kind of way, make its way down. And so global bonds hedged to Aussie dollars, they're up about 5.4% for the year, while Australian bonds are up even a little bit more at 6.3%. So much higher than what we've got out of, say, 30-day term deposits.
Thanks for that, Steve. A great update. And just a good reminder of the investment principles that we're always talking about. Having a well-diversified portfolio, focusing on the long term, keeping invested even during the turbulent times, and focusing on our long-term objectives. So that's it for today. Thank you for attending, and until our next update, bye for now.